Hello and welcome to this special program. The Indian market hit a record high in some style, opening with a gap up of around 800 nifty points as the street cheered the exit polls forecasting another Modi wave. Top market experts joined CNBC TV18 through the course of the day to share their optimism on the likely continuity in governance, with most advising investors to buy the India story on a long-term basis for wealth creation and eyeing a likely doubling of the Nifty in the next 5 years. We spoke with Samir Arora of Helios Capital to understand how the market was likely to read into the exit poll results and what could be the strategy for investors going forward.
You heard it from me first, which is that actually beyond a point, who cares whether it's 340 or 360, as long as it is more than 272. Let's say that last night, the number had come for BJP at 290. How much do you think the market would have been up today? Maybe 2%. So now it's, say, 3.5%. So that is worth 1%. From tomorrow, that would not matter. Of course, assuming that these numbers are similar to the final numbers. So the real bet was whether they are coming back or not on their own majority and maybe 10 extra seats. And that was enough of a bet to be as bullish as you can be. So therefore, this is clearly the fault of the FIs and all to start getting nervous 1 day before, 2 days before, as if they found something. I tweeted on this that it was the market which people were seeing and then concluding that there is something wrong. And then, sort of that spiral was going on that, oh, there is something wrong. And then therefore the market was weak. Although at the end of the day, last month also the market was not down. It was like zero-ish.
So, Samir, so you get this exuberant kind of a start, right? Then tomorrow you got actual results. And let's say the actual results are similar or even better, slightly better. So,
no, I'm saying don't think like that. Think that if they are worse, but you are still at 300, let's say. It can't be 270. I think it won't matter beyond maybe plus minus 0.5%. Because the market's main interest was that the same management is there, that sort of the same policies are there, the same trust is there. Most of the ministers are the same, the railway minister, this minister, the oil and gas minister. So beyond a point, this analyzing stock market return with exact number of seats.
Yeah. No, I completely take. I was not actually coming to how much more if that number moves to 400. That was not my question. My question was what to do. What should one do now? Which are the two points? One is, does the base of the market move higher? And then, as you were saying, from here now to the budget, you can't make a bearish argument in that sense, right? I mean, how are you bearish, right? Why are you bearish? So that is one. Yeah, there's the base move higher, and then what should one do? What has done well, continue to do well? PSUs, defense, manufacturing, railway, power. Is that the list to focus on? Go on.
So that, first of all, the base definitely goes higher. And the reason for that is that the FII also has less reasons to be negative. And this year, they have sold about $2.5–3 billion year to date, which I think at the end of the year will be positive. But more than that, if they were using this, see, the thing is, at the end of the day, everybody knows what is happening. It is that the investor is basically worried about his sunk cost. He has too much money invested in China. He has ignored India in the past. Now you have to prove to him beyond a point. One university endowment guys came to us and said, okay, I need to write a note for the board, and one of the points was, can you send some evidence to show that the elections are fair? This not now. We were asked about 20 days ago that I need this bullet point. Can you give me some material? So absolute nonsensical stuff. I hope he's not listening. But the point is that these issues will come down, and in general, India was doing well without this also. The market was up. If I look at NSE 500, is up some 8% already this year. So not bad in itself. So the base definitely goes higher. In terms of immediate, which means today, tomorrow, obviously the same stocks do well again. And thank God I have to make some of these now, these PSUs. But I think beyond that, my favorite sector comes back, which is the financial sector. Because if FIIs come in, what is easier for them to buy? Financials are related to the economy. They are not like IT or pharma or consumer, even a little bit, which is more on their own kind of thing and not dependent on government policies and reforms and those kind of things. So these are domestic, cyclicals, economically sensitive. All that also includes financials. And it is easier for them to justify it because you can clearly show that last 2 years they've underperformed, at least as in aggregate. So I think the financial will be for the next step. Today, tomorrow, it will be the same old PSUs and the manufacturing. But beyond a point, buying some of these manufacturing type companies at 70 multiple and 80 multiple because they got 4 orders is also going to not work out in the long run. Today and tomorrow, they are the biggest movers, I guess.
Absolutely. So I guess there's consensus there. I mean, Samir, we've been speaking to people. I mean, we had a working Sunday, by the way, as well, just sharing. And there's consensus.
Even we had, don't worry, we also had.
Oh, okay, then it's fine. Okay.
Otherwise, I could not have come on this call today morning with you.
No, glad. It's for the greater good, right? We're looking at the market, looking at what lies ahead. So for the greater good, it's a working weekend is fine this time. So, I just want to, before we talk more about sectors and what will do well, I just want to go back to the FPI issue for a second, because that's the big elephant in the room, right? When will these FPIs emerge? And the reason that question
They will emerge.
Sorry?
That is too easy. They will emerge from today onwards. Don't worry.
Okay. So if you're saying they will emerge because they've been on the sidelines, and we had Bala, of Aditya Birla Sun Life Mutual Fund, he was really thumping the table and saying, guys, we will be the biggest beneficiaries of the move in the next 2 days because the domestic guys, they're in, right? The foreign guys have been on the sidelines. Now, what could be the extent of it? I know these things are hard to guess, but was this the only reason, the lack of clarity on political continuity, was this the only reasons that FPIs have been absent for the last 6 months? What happens? I mean, can you sort of help us gauge the magnitude?
I saved one slide here from a Goldman presentation, which right now I can just read out. So if you see last 4 or 5 years, actually disproportionate money has been put into India when they are putting money into emerging markets, and least amount has been taken out when they're taking out. So I'm just reading exact numbers. So in 2020, they took out 33 billion from Asia, and they put in 23 billion in India, which means ex-India, they took out $53 billion, okay, or $56 billion, because the net was still 33 negative. Then in 2021, they pulled out 34 billion from emerging markets, but from Asian emerging markets, and in India, they put 3.8. So again, in a market where ex-India, they were taking out 36 billion, they put in 3 billion to India. And then in 22, it was more or less in line because of high interest rates, where the market, they took out 60 billion overall, of which 17 were from India. I'm just reading out direct numbers. And then 23, they put in total 31 billion, out of which 21 was in India. So point is, nobody's giving up on India. Don't worry. They can fine tune it a little bit because somebody's averaging his China position. Somebody's embarrassed about putting in India now if he did not have it before. In 24, it's a bit negative in a sense, relatively, where they put in overall 12 billion, but from India, they have taken out 2.9. This is as of this report is dated 2-3 days ago. And this is all because they put 14 billion in Korea. Big picture being in the last 24 years, in 20 years, they've been positive on India, and they put in on average 20-25 billion in good years and 5-10 billion in bad years, unless it's a negative year. So they will come in plus minus a few weeks only from today. At the end of the year, this year, I don't think there would be a negative influence on the market. But they are somewhat idiots, and I am also an FII, and I want to benchmark against them. So I'm happy if they underperform me by not being bullish on India so far.
FIIs will eventually turn bullish. They will come to India. That's the view coming in from Samir Arora. We also spoke to Madhu Kela of MK Ventures, and he said that this is Amrit Kal for equity investors. Listen into a portion of that interview.
This is Amrit Kal for equity investors for sure. So I think the important thing is that, how much of your allocation is there in equity and how long a view you are willing to take. Because, these events will come, markets will open up, gap up. But if you are really structurally positioned for equity, I think everything is really, really falling well for India. If you look at, all our macro indicators, inflation, interest rate, fiscal deficit, tax collection, GDP growth rate, and the way India is now positioned even within the international markets, where geopolitically we are positioned in a fantastic manner. So I think there is significant opportunity for wealth creation over the next 5 to 10 years. And that is the biggest call. And that is why how much you are really positioned in equity. What is your allocation? That is the important question to ask yourself. The other thing, Prashant, obviously markets have run up a lot. There are very rich valuation in certain pockets. So when you actually go to buy individual stock, even a guy like me is struggling because looking at the valuation. But what I figured out over the last few days, that if you are willing to take, because you are late in the party, if you're a new buyer, if you're an old buyer, the choice is very clear that you have to be staying with the market, and you have to staying with your portfolio, you have to staying with your investment. But if you're a new buyer and wanting to put new money in the market, then if you look at immediate making money, that is going to be tough because you're coming at 23,000 Nifty, and that's not going to be easy. So if you look at next 3 years, if you start to look at 2026-27 from earning perspective, then you can find a lot of investable ideas. So that is what my focus is, to really find companies which can grow earnings significantly over the next 3 years. And Prashant, you and I have seen in the markets for last 30 years, basically, if the backdrop is positive, then there is tremendous opportunity to buy individual stocks. And that is what the focus should be, to really buy individual stocks, because the backdrop of the market is very, very positive. And lastly, I would say, this is time for wealth creation, my friend, and it is not time for income generation.
Okay, that's it's a punchy, nice one. And the point is, the size of the cycle determines how much money you can make, right, over a period of time. And this seems that this is extending, it's bigger in that sense. So with that 3-year kind of view, right, not chasing what is sexy today, what is in fashion, momentum today, but because you must take a slightly longish view because you're coming in at 23,000. What are the areas where you are finding a lot of opportunities, Madhu? Is it again manufacturing? Because that is we are seeing a renaissance of manufacturing in the country, right, which was not there for the last couple of decades, but we're starting to see that. Is that one big sort of area? What's the sense?
Prashant, India is the area, honestly speaking, like a buffet, as my friend, philosopher and guide, Rakesh Jhunjhunwala used to say, that there is a buffet out there. You have to choose what you want to eat, and you have to make sure that you don't eat so much that there is indigestion. That's the only thing which you have to be careful about. But otherwise, there will be stock-specific opportunities in manufacturing, in chemicals, pharmaceutical. There'll be, I think, financial sector has been underperforming for last 2 years. So there'll be really great opportunities in some select private banks, and select, financial stock, capital market related stocks. So the list is really long. Prashant, I will just repeat once again. The mood point is, are you positioned in the right stocks? And do you have really the view of 3 to 5 years? And can you digest this volatility which will happen? And that, if you have that focus, then I'm sure even today at 23,000 Nifty, you can find many ideas where you can make a lot of wealth.
Madhu, hi, good morning. So good to have you with us on this morning. Like Prashant was saying, these are days that we'll remember, right? Either ways, whatever happens. But these kind of moments in these days you remember. We were in conversation with Samir just a while back, and I thought he made an excellent point. He said, let's talk manufacturing. He said, the name is a wrapper. Manufacturing involves, and it's true, everything from a ball bearing company to a large manufacturer to someone who's doing roads and capex to someone who's making boilers. So now help us, distill this even further when you're looking at valuations and you don't want to get burnt, right? Next 3 years, what do you like the most in this manufacturing / capex themes? If you could narrow it down a bit for us.
So Surbi, as I said, that one financial sector clearly looks like a very, very good risk reward from my perspective. And within manufacturing, there will be individual sectors which you need to focus on, as you rightly said. So I see opportunities even in the sectors. And see, if you are talking about manufacturing, then you have to clearly take a 3 to 5 year view. Because if you're looking at stocks from a next year perspective, then they look really expensive. But the certainty of earning, which is there in India in a lot of these companies, and if you are willing to take a 3 to 4 year view, then you will be able to find a lot of ideas. So let's say I like a couple of forging companies. I like some companies, even in auto ancillaries. I just said the area is very, very wide. I am very, very bullish on select names in pharmaceutical, which is again part of China, India plus one. So Surbhi, today's time is really, I would just like to reiterate, it is not about individual companies or one or two sectors. It is about your own conviction in India. It is about being convinced, even though market is at 23,000, is there a significant wealth creation opportunity which is left over the next 5 to 10 years? That is a moot question to be answered. And to my mind, there is the decisive yes to that question. And if you are willing to take that bet, and if you are an individual investor, of course, you put money in AIF or a mutual fund, so your job is easy. But if you are even a stock picker, and if you have this time frame, I would just like to reiterate only one thing: take that view, focus on wealth creation and not on income generation.
Focus on wealth creation and not on income generation. This is the word coming in from veteran Madhu Kela. On that note, we take a short commercial break. More views from market masters on the other side. Welcome back. Atul Suri of Marathon Trends also joined us this morning, and he says the next big trend will be defined by a political push in key sectors. And the sectors he's really betting on big are electric vehicles, green energy, and the e-commerce space.
What I am looking at for my investors is that I feel the next big thing is going to be this whole 125-day agenda. Interestingly, Modi's increased it from 100-day of the new government to 125 days. And I feel that there are certain themes or sectors which when I go through it, or I get a sense that they will be where the action will be. And then activity will be based in those sectors or those themes where there is going to be some political push or the government push. So I feel that the areas that will really stand out is that I think there's going to be a lot on the electric vehicle side. Of course, Tesla is going to be a poster child, and the question is going to be, will they come now or later? But irrespective of that, I think electric vehicles will be a very big theme. There'll be a lot of push out there. Green energy, another area that I think is going to see a lot of government policy initiatives in the next 125 days. I think there's going to be a lot of clarification on the e-commerce side, especially the taxation side. So I feel there is going to be a lot of government clarity or trust in those areas. So these three sectors, I think, will be what you should look for. I think that there's going to be a lot of focus on 10 new cities for manufacturing. So the whole industrial activity or the industrial stocks or the capital goods and engineerings, I think will continue to sort of benefit from it. Another thing they've been talking about is digitization of land records. I think that this is going to be a game changer for the real estate sector. What demonetization did to financials, I think this digitization of land records will do to the real estate sector. Shippings and logistics, that's another area the government has been talking about. So these are the 5 key themes that I think will matter, because in this next 125-day agenda, I feel there will be a lot of policy push, policy initiatives, and then you will have to go and pick stocks and sectors in that thing. Broader market being what it is, I guess it just is an overall sentiment play. But I would actually focus on these themes and trends, which I think is what will reward the market or investors going ahead. That's where I would really go and deploy money now.
So the way you're approaching this is not so much in terms of letting the price action lead you, right? But sort of having a slightly broader thematic kind of approach in terms of what are the big spots where one should look for action, and this action will emerge. Is that the way?
Yeah, I think so. See, one is an index play. You can come up and whatever, 2-3% up. Maybe something happens tomorrow also. We don't know what it will be. That's fine. That's the next 5% you take away. But the key thing is that where is the next 10, 15, 20, 30%, And from that point of view, as I said, that it will be important to play those themes, play those things. And the government or Modi has been very, very clear that his first 100 days, 125 days now is going to be a major thrust area where he says he's going to lay the blueprint, not just for the next 5 years, but the next 25 years or for whatever centuries to come. So I do think that there's going to be a lot of policy initiative that is going to come there. And that policy initiative is where you want to be, because that is giving you the direction for hopefully for the next 4 to 5 years. As far as this government, if it comes in and if the majority works out, that's as exit polls are. So I would really play for this on not just morning pop or tomorrow's pop or what is going to do this week, but I think I would really play this market for the next 3 to 5 years. And in these 3 to 5 years, this is something I saw between 2003 to 2008 also, that when you have industrials based activity, industrial rally, what happens is these sectors and themes perform for the next 4 to 5 years. Very often the narrative is, oh, they've run up too much, they've become expensive. But you really see and go back in history and time and see that a lot of stocks in that phase had far, far outperformed the market. So as a portfolio manager or as an investor, my aim is to look at themes. And the themes that I laid out to you, whether it's electric vehicles, e-commerce, the land records thing, cities, new cities, shipping, logistics. I feel some action is going to happen even in the PSU banks. A lot of deals have been stuck up, waiting approval. So I think that these themes will be areas to focus on. The broader market, yes, it's an index, it's a larger trend, but ultimately our aim is to outperform. And we feel these pockets will give us opportunities going ahead. And all this, as I said, is the backdrop of a global market, which I think is also on a very good wicket. I think that the whole global equity bull market, as I said, we've kind of forgotten for the last few months because of local narrative. You realize that even there's a lot of activity. So we are in a good equity, positive, buoyant atmosphere. One is to just go out and seize the index, or second is to look for trends. And I feel that there are some very strong trends emerging right now.
With that, it's a wrap on this edition of Bulls Charge Ahead. Thank you very much for staying with us.